What's going on, everybody? Shiraz Ahmed here, and today we're going to dive into the differences between a Roth IRA, traditional IRA, and 401ks. Now, this video is for my American viewers that wanted a US version of my recent RRSP versus TFSA comparison video, so stick around. All right, welcome back. So before we get too deep into anything, my obligatory disclaimer as a licensed professional. It should go without saying that this video is for informational purposes only, and the content in here should not be considered to be advice. And if you're ever unsure about your own situation or you have any specific questions, please contact a qualified financial professional. All right, now with that out of the way, let's get into the 5 differences between these types of investment accounts. Okay, so point number 1, which is tax treatment. Now, a traditional IRA and 401k are both tax deferred accounts, which means that you can get a tax break on your contributions today, but you pay taxes on your withdrawals in the future when you start to withdraw in retirement. So the idea is that you'll end up being in a lower tax bracket in retirement than you are today. So you'll end up paying less overall taxes, at least that's the theory, ultimately to get that initial tax break. Now, on the other hand, a Roth IRA is a tax-free account. And that means that you contribute after-tax dollars and your money actually grows on a tax-free basis. Now, this also means that you pay no taxes on your withdrawals in retirement. This can be a huge advantage if you expect to be in a higher tax bracket in retirement than you are today. Now, if you expect to be in a lower bracket in retirement, a traditional IRA or 401k might actually be a better choice for you. Okay, so number 2, contribution limits. Now, in 2023, you can contribute up to $6,500 to a traditional or Roth IRA and up to $22,500 for a 401k. Now, if you're over 50 years old, you can actually make catch-up contributions, which are an additional $1,000 for a traditional Roth and $7,500 for a 401k. Now, it's important to keep in mind that these contribution limits are subject to change over time, so it's always a good idea to check the current limits before making any contributions. Okay, difference number 3, which is required minimum distributions. Now, RMDs for traditional IRAs and 401ks require you to start taking distributions when you reach age 72. Now, the idea behind that is that the government wants to make sure that you're actually using the money that you save for retirement and not just using it as a pure tax shelter. Now, with the Roth IRA, you do not have RMDs, which means that you can actually leave the money in the account as long as you feel like, and it will continue to grow on a tax-free basis. This can be a massive advantage if you're looking to pass your retirement savings on to, let's say, for example, your heirs or your next of kin, as they will not be required to take any distributions either. All right, now difference number 4, which is employer involvement. Now, 401ks are employer-sponsored retirement plans, which means that your employer can choose to match your contributions to a certain amount. Now, this is essentially free money that your employer is giving you, which can significantly boost your retirement savings. Now, with traditional IRAs and Roth IRAs, you are ultimately responsible for making all those contributions yourself. Now, this can be a disadvantage if you're looking to maximize your retirement savings, as you'll be limited by the contribution limits that we discussed earlier. All right, now difference number 5, which is eligibility. Now, anyone with earned income can contribute to a traditional IRA, but the tax deductibility of your contributions may be limited based ultimately on your income. For example, if you're covered by a retirement plan at work, you may not be able to deduct your traditional IRA contributions if your income exceeds a certain level. Now, to contribute to a Roth IRA, your income must be below a certain threshold. Now, that also varies whether you're filing single or jointly, so please make sure you check with your CPA on that one. Now, if you make too much money, you won't be able to contribute directly to a Roth IRA, but there is a window open in that you may be able to contribute indirectly through what's called a backdoor Roth IRA. Now, 401ks are offered by employers, and eligibility to participate may be restricted to certain employees. Okay, so that kind of summarizes the main differences between the Roth IRA, traditional IRA, and 401ks. Now, to summarize these again, the major differences are the tax treatment, contribution limits, required minimum distributions, employer involvement, and of course, eligibility. Now, understanding these differences is critical to choosing the right retirement account that ultimately suits your goals and objectives. Now, remember, there's no one right answer or one size that fits all. It's rather what's right for you and your individual circumstances, which is why I suggest that if you're ever unsure, you should really seek out a qualified financial professional. All right, now thanks for staying tuned into the end of this video. I really hope you found this information helpful. If you did, please consider hitting that like and subscribe button, as it really does help out the channel. I'll also be putting my contact information at the end of this video. If you have any topic ideas or things that you want me to cover, please send me a note. I'd be happy to make sure that we address them. So until next time, please stay safe out there, you all. Take care. Bye for now.